Next paper, Oskar Kowalewski is going to give, as dry as a bone, how do banks cope with drafts.
Okay, thank you for the invitation and thank you for giving me the opportunity, especially as a European, and there are so many Americans. I'm a little bit overwhelmed, so that's why I stand here. Okay, it's a joint paper with friends of mine, which is from Michael Bray from University of Lille, is a banker, and then Piotr and Eric, they are from Norway and Swiss, and they are both related to agroeconomics. So we came with this, we have been discussing a little bit about drought. Why? Because if you look even on the papers before what we have seen, they look on big disasters. And it's nice, but the idea of this previous disaster, they affect everybody. Why drought is starting to be more and more popular. We see it affects a lot of people, especially now when I was going here. In Europe, it's hot. It's 30 degrees. It's unbelievable. And we have big problems. And the same is in the US. I would say the last 2-3 years, what we observed is a drought. And what is about drought is a disaster which mainly affects agriculture. Okay? And what is we know, and there's even a recent study from Rajam Raghuram from the University of Chicago, they show that they looked on a drought in the 50s in the US, and they show if farmers don't have access to finance, they see a decline of counties. If farmers have access to finance, then they see they can adapt. They start to invest, they start to invest in irrigation system. It shows it's very important if during the drought there was access to finance. Okay, so we like this paper, but because it's somehow supplement us, and it shows it's very important for farmers if they have access to finance. And indeed, there's also a study from the Fed of Kansas, which they looked especially on the agriculture loans, and they show that farmers, I would say, there is a demand of loans when the farmers have a problem of, I would say, with the income. So it's always, I would say, contra-cyclical. And then we know, and this is also nice about US, that the government in the last year was helping out the farmers during the drought period. So we know that also government help is quite important. So what we use? So we wanted to see, our first focus was to looking on agriculture, but as I will show you, we looked even much broader. We wanted to see, is it really agriculture which is affected? So we look also on the enterprises. So we used bank level data on call reports, but we have also county level on information on small business lending and farm lending, and then we have also information on summary deposits and interest rate from RateWatch. So the ideas what we mostly are interested in small local banks. So we make differentiation across banks. So we look on banks which operate only in one country, in several countries, in multi-state banks, and I would say over the US. But what we do, we try, I would say, to look where the focus of the bank is based on the deposits. And as you see, we have national banks and state banks. National banks are much bigger, they have much larger deposit, but we see also, state and local banks are still quite important based on deposits. And then what we use, which is a drought monitor, US drought monitor. The idea is the US government created, I would say, it's a great system. The idea is mostly it's created to provide help to farmers. So they identify counties and they use a very sophisticated system to tell if it's, I would say, abnormal drought, or if it's surf dry, or it's extreme drought. So in our case, we look on really extreme drought to see what happens, okay? We look only also on situation during, I would say, from May, October, during the growing season, because we know this will affect the farmers. And the idea is we look on counties. So we use on 5-kilometer grid cells of the drought. So to give you an idea, and probably I would say most in the US, the biggest impact you see in the Southwest. Okay, this is the part which is hardly, I would say in the last 20 years, it was mostly affected by the drought. But if you look, drought is quite cyclical. Okay, so you have this drought in 2012, which you see it was affecting a large proportion of the US. And this is also when the government introduced a new program that they decided to designate counties. And there's where the money is now flowing. So in this case, it's very fast, the money is going. And we see indeed, I show you, that the way the government now is distributing money to the farmers has an effect, how those farmers are performing. And the same, it's also affecting the banks. So what we do, we link the banking data with the drought index. We do some assumption, but it's also going back to the paper of Rajan and Ram. We assume that the farmers are using the bank which is the closest one. Okay, the problem is always of identification. We don't know where the farmer is taking the loan, but the research shows that normally the farmers are using the local banks. That's why we are also mostly interested in the local banks, what's going on. So to give you an idea, so on one side, what was a little bit different to the papers, even what we were presenting, we don't see any difference. So on general banks, even local or large banks, they don't change lending during drought period. But then if you look on the loan portfolio, then we see a change. Okay, so the idea is there is still the same supply, but it now goes different directions. Okay, so this is what was a little bit, I would say, I expected some changes even on the loan level, but this is what we don't see. And then what we also observe is that the federal program, which was introduced in 2012, it helps mitigate the problems which we have seen before. Okay, so first we look on the agriculture. So what we see, it's a little bit not surprising, is we see a decline of new loans to small farms. Okay, this is what we see, especially prior to 2012. We have seen, then we see after 2012, we see still a small decline, but it's not as big as it is. And what we see a reduction of agriculture loans of local banks and agriculture banks. So how we define agriculture banks, so we created like a special group of banks where when a bank has where agriculture loans are at least 20 to 25% of the total portfolio, we call it agriculture banks. So we then don't look if it's a local bank or not. Apart with it, we look on local banks. We look also on banks on specializing in agriculture. And then what we find that if there is a drought, they indeed reduce lending to this particular clients. But once again, in 2012, introducing of the designation program and the very fast flow of money to farmers, it's mitigated. We see still some decline, but it's not as big as it was before. If we look on lending to enterprise and during drought, we see there was a decline to new loans to small firms. We assume there's the problem of this opaque information. It's a small firm, it's drought, so maybe I will wait what happens. But if you look overall, we don't see any impact. Okay, so enterprises are not affected. So it's also something which we expected, as I mentioned. We expected the drought mostly affects agriculture. It will not affect, I would say, other businesses. But what we were a little bit surprised is that we see that when there's a drought, there's a first increase of consumer loans. And one of my explanation of ours was that maybe, the farmers, they cannot borrow anymore. So what they do, they start to use their credit cards to borrow. And indeed, once again, when in 2012, the federal programs were introduced, we see it's the reverse situation. We see that the consumer loans are repaid. So maybe it's going in the line of the story that some farmers are using now the money which they received from the government to repay the loans. Then we look on mortgage lending. So there's a large line of literature showing that, I would say, real estate is affected by climate change. So personally, I was expecting to see something. And then once again, we didn't find anything. So which was a little bit surprising because I was thinking drought, so real estate prices should go down. No, nothing. Then we decided to go a little bit deeper. And then what we find out, we see an increase in loans secured by farmland and by construction. So once again, a possible explanation is that maybe now those small banks require more collateral. They say, I don't provide you a loan for a farm, but maybe I can provide you a loan, but then I would need more collateral. In this way, that's why we see an increase of farm lending. But at the same time, we observe a decrease in residential property decrease. So it seems maybe it's a little bit, I would say, there is an effect, but overall we don't see. It's only once again when you go a little bit deeper into data, you see there's some changes within the portfolio. And then once again, if in 2012 the programs are introduced, everything seems to disappear. And then we were thinking maybe some of the changes can be explained by the bank performance. So what we were let us looking on non-performing loans. And with what we find that we were a little bit surprising is the quality, the portfolio quality of banks, of local banks improves, doesn't decrease. So indeed, we see that there are less non-performing loans. So it seems for me that especially during the drought period. Maybe because small banks are afraid. They know that something can go wrong, so they start to monitor more the consumers. And in line with these stories, we see also increase of deposits. So we were thinking maybe there's a problem of funding. Maybe, you know, as I mentioned, we have seen an increase of consumer allowance increasing. So maybe, you know, now farmers are going to the savings, but we see the opposite. Indeed, we see that there's increase of deposits, and then we look on the interest rate. We find out that local banks are paying higher interest rates. So they increase their interest rate. So we even in the paper they decided to look a little deeper because I was surprised. It seems they have money, and at the same time they don't last more. So what they did, which was a little bit surprising during this time, I would say the surplus of money is mostly located, I would say, the small banks use interbank market to deposit the money in, I would say, larger bank, which was a little bit surprised because I would expect that they will use it a little bit differently. And then, so overall, what we find out, you know, we find that the drought, as I mentioned, it affected once again also to underline, it affects mostly local banks, small banks, to less extent larger banks. And what we find out was, I mentioned it still, we see a contraction of agricultural lending to lesser extent after the introduction of the government programs of the small business. We see an expansion of consumer loans, and we also see a build-up of liquidity reserve, what we call as a hoarding. It's like a preoccupation. And then what we see, there's no really explanation by non-performing loans, so nothing happens bad to the banks. So at the same time, we see a change if you look on the US banks, but at the same time, we see that the effective drought is not as severe as by other disaster, which was, I would say, a little bit for me, we were hoping for a much bigger shock, but it doesn't come. Maybe, you know, we need still to look a little bit deeper. And at the same time, to underline the government, really the programs they help. So in my opinion, they work very well. So I was really a little bit surprised. In this case, I can only congratulate it. Okay, thank you, that's all. Thank you.
Thank you.